S&P Global Ratings has kept South Africa's credit ratings unchanged. This decision is in line with economists' expectations. Let's now unpack this with the economist Mudiwa Gavaza. Mudiwa, a pleasure to have you on the program this evening. Firstly, what is your initial reaction to S&P's decision to keep South Africa's credit ratings unchanged? Were you expecting this outcome, or were there indications that a change might occur?
Good evening, Klantla. Well, as you just put it now, this, unchanged or keeping things or keeping the status quo was expected. And, in my assessment, I would say that, S&P has probably taken a wait and watch approach, as many entities have, during this time. Obviously, one of the key things that's happening this month is the upcoming election. I believe we are 10, 11 days away from that. And, the ratings agency is probably, saying that it's too early to tell, right now, just around the ratings. And the next assessment is likely to come in November. And that would likely give them a little bit of time to actually see how the election would have gone at the end of May, and gives them, that 5 or 6 months to actually assess how things have gone and whether things are headed, in the right direction. So I would say that we've probably just, sort of seen a, sort of wait and watch approach as the country nears elections.
Mudiwa, how does the unchanged credit rating then impact South Africa's economy in both the short and long term? And what are the potential benefits and drawbacks of maintaining the current rating?
So there's a lot, to unpack, when it comes to something like that. The credit ratings, for South Africa, have been maintained at BB- and BB with a stable outlook. And you have, some mixed implications from that point of view. Obviously, if we're going to start on the positive side of the equation, you have, two of the big things that you have to consider is that your borrowing costs, for the country, are maintained where they are, because by avoiding a downgrade, or at least not downgrading, it means that, lending or, continued investment in the country it doesn't get affected from that point of view. But also at the same time, the stable outlook that is being maintained, that goes a long way to maintaining, investor confidence, in the country, which is definitely, a good thing. But unfortunately, the fact that, that rating that we're talking about is still 3 levels below that investment grade, does mean that accessing certain types of capital for the country still does remain, somewhat difficult and expensive, from South Africa, especially when they're borrowing internationally. So I would say those are the things that people really need to take into account when considering, something like this. Perhaps more in the long term, the stable outlook obviously gives you some predictability, and then it also gives us some incentive for reform, going forward, because these ratings are something that people are constantly keeping an eye on, and it is a point of pressure for the government. So it is an incentive, to, perform better economically and also institute better reforms, just so that the country can, get back its investment grade, ratings. And then I think just the last one is the fact that, a neutral outcome avoids, some of the potential drawbacks that would have come. But at the same time, at least the fact that there is a stable outlook, gives people that ability to say, at least we have that, something that can keep the country ticking along.
So very interesting is that S&P also noted that the private sector power generation could boost growth. Can you elaborate on how significant this boost might be, and what specific projects or developments are contributing to this apparent optimism?
Well, right now, it's no doubt that the last 2 years, load shedding, power cuts, and that type of thing have been a big thing for both individuals and businesses to consider. And right now, where we are, there is a lot of dialogue, a lot of discourse around the fact that we've gone for, literally 2 months now without a day of load shedding. Lots of speculation about, is this, just because you have a government that's trying to campaign and just keep positive sentiment just before the election. National Power Utility ESCOM has had to come out and actually dispel some of these things and say, no, we've actually just implemented better systems in place. And that discourse actually shows you just how important that aspect of load shedding has been for the South African economy, with certain elements of economic growth actually being attributed, at least in the current quarter, a lot more economic activity to the fact that there hasn't been, load shedding right now. But when it comes specifically to your question around some of the projects, one of the things that we have observed and have been keeping an eye on is the number of projects that are out there, especially renewable energy projects that a number of companies have been committing to, particularly in the areas of solar and in certain cases wind. The cost of solar has come down quite a lot, taking advantage of the sun in South Africa and that ability to generate that power. Lots of solar projects coming online, lots of companies, for example, turning the tops of buildings, into solar farms. In essence, car parks at a lot of corporate, headquarters now using solar panels as opposed to roof tiles. All of those things lending themselves to some of the projects that are out there. And then I think just the last two things would be the fact that ESCOM has been doing a bit of work to try and incentivize this. Obviously, last year we saw a liberalization of the market by President Cyril Ramaphosa, which is a good thing. And on the execution side, we've been seeing something, power wheeling, for example, where companies or organizations generate power in one part of the country and have deals, to have equivalent power then delivered to their operations, or downstream entities, somewhere else in the country, just as a way to help to ease the burden on ESCOM.
So before I let you go, Mudiwa, Transnet was also mentioned, or Transnet issues were also highlighted as a drag on the economy. What would you say are the main challenges facing Transnet?
There's a lot when it comes to the state-owned, freight rail and logistics company. I would say that you're probably looking at a whole host of factors, a cocktail, factors to consider, some of which being, the crumbling rail, network debt problems, as well as some of the, operational issues, particularly around the rail network, and then insufficient ports and shortage of, some of the freight trains. People will remember that recently, just something like online orders, a lot of people's, on a consumer side, a lot of people's online orders from overseas were stuck at countries' ports, same with, supplies for a number of businesses, because of some of these issues. And then we also have the fact that you have underinvestment and some of the mismanagement that has happened, at that particular company, and also at the same time some of the, deep, financial issues. So a lot of that, is a weight, on the country, because that is one of those industries, one of those SOEs that, provides quite a big logistical framework in the background that's helping so many industries to tick along. So when things are not working well in that particular ecosystem, then it has huge, implications across the rest of the broad economy.
Mudiwa, thank you so much for your time. That's our guest, Mudiwa Gavaza, sharing his expert analysis and perspectives, of course, on this decision by S&P.